we're just going to go briefly over just the current market stats and what's going on out there in the world. Team, if you want to jump in at all at any point and give your kind of boots on the ground experience of what it's like out there right now, that would be greatly appreciated. But I'm going to share my screen here, and then I'm going to turn it over to our trusted mortgage broker, Ryan Bond, who is going to break down, I think, a topic that a lot of us are kind of weighing right now, whether you're a homeowner or an investor, interest rates and the timing of financing. Should you buy? Should you wait? What kind of makes sense right now strategically? Ryan's going to dive into that, which I think will be really insightful for people and helpful if you're trying to make decisions right now as a home buyer or an investor. So I'm going to share my screen. So give me 1 second here, and we'll talk about what's going on out there in the market. So if you are shopping right now in Calgary real estate, you probably are feeling the inventory pain, and it seems like every realtor I speak to across the country is having these challenges where there is a lot of interest to buy, but there's a lot of struggle to buy, where inventory is just at serious lows. So as a investor or a homeowner, obviously a lot of our clients are also weighing, should they exit? Is this time to sell and maybe diversify? Or if there's a property that's not performing, so well, or in an area you maybe want to get out of, it could make sense to do that right now for sure. We are seeing, competing offers. Maybe Dana can tell us about her weekend she had with her listing, but it's pretty competitive out there. Hey, Dana?
Yeah, so myself and my clients decided that we would list, because it was the long weekend. We were worried that listing on the long weekend would create less of a frenzy because everyone goes away for the long weekend. But as Natasha just said, we had a lot of smoke, and I'm sure you've heard in the news, a lot of smoke in the last week. So the idea was kind of like, oh, maybe people won't go away because it's not a good weekend for camping or whatever. So we decided to list on a Thursday night and hold showings from Friday to Sunday and even Monday, because it was the holiday Monday, and do an open house. And I feel like because we waited, we were able to get 16 offers, all well above list price. And I do really strongly think that that's because we let the long weekend kind of run its course and let all the buyers in, because there's even buyers that came in without their agents because their agents were camping. So summer weekends, like everyone wants to go away, but I think open houses are really important right now, and letting everyone have a chance to see the homes right now is also really important.
Yeah, for sure.
Mm-hmm.
We see this a lot. If you are a seller, the more eyeballs you get in there, the better, right? The more people that are interested, the more you're going to get for your home. So I know it's tempting when you get that first offer as well, and it hasn't even hit the market. No one's seen it. But usually you're going to want to get as many eyeballs on the property as possible. So thanks, Dana. So just to touch briefly on where numbers and figures are at for Calgary, these are the April stats for the city of Calgary. And the first two things I always look at are these ones on the side here. My favorite stat always is months of supply, because when I'm looking at any market, because I want to know what are the market conditions right now. And these can change throughout the year, but right now we are sitting with, approaching 1 month of supply. So what that means is if no other listings came on the market at the pace things are selling right now, we would be sold out of all inventory in 1.2 months here in Calgary. And that includes all sectors of the market. This is not just detached or apartment, which is extremely low. So this is very low inventory, definitely sellers market conditions. So this can make it very challenging for those of us trying to get into the market, but very advantageous if you're looking to sell. So this is where our average prices are right now per sector, keeping in mind this is for all of Calgary on an average basis. So, and we've seen, positive green arrows for quite some time now for all of the sectors, which is really exciting. Big news here in apartments. If you do have condos and apartments, to see double digit, year over year price growth is huge. We struggled in that sector for quite some time. So this is really, really encouraging to see, especially that our downtown core is starting to really feel revitalized and reinvigorated. And there's a lot of excitement and traction. What this also means as an investor, if you are looking to buy and these, detached homes with suites, and these prices are starting to get quite high, they're pushing up, to the 550 to 650, let's say. As an investor, you could, look at the condo sector or even the townhouse sector, because the demand is only growing here, and you're kind of investing in this sector when it's just starting to see some price growth. So keep in mind, this is just year over year. This is not like all-time highs or anything. The condo sector still has a ways to go to be sort of fully recovered from where we were sitting prior to the recession that Alberta endured. So there is definite growth here to hit historical highs, like significant growth still to happen. So lots of room there. Just to scroll down here a little bit, I'm just going to shrink this so I can see better. So as we talked about months of supply, once I look at that number, then I always like to look at it per sector. So row houses actually have the lowest month of supply in that 0.95, so less than a month of supply. And the reason for this right now is buyers are having to adjust their goals of what they would like to buy. And so as prices go up, a buyer who is maybe going to buy a detached home is now into a semi-detached, or a semi-detached buyer with rising interest rates, rising prices, are now going down into that row. And so we kind of saw this start in the detached market, and now it's shrinking down. I would expect this apartment number to continue to shrink as well into summer months. So really across the board, it's low inventory. I don't expect that to change too much. Going into summer, though, it does tend to slow down. People aren't out there shopping as much. They're enjoying. And so summer months can be a really good time to scoop up some deals when other people are distracted. And right now, it's always the busiest, craziest time. If anyone wants a copy of this, this is just the Calgary Real Estate Board's stats, and we can send this off to you, no problem. The other little map I always like to is just this like snapshot of the city and what's happening where. And again, all green arrows in all of the sectors of the city. The city center, it's a pretty big group. That doesn't just mean condos, it's the whole kind of city center. And again, this sector of this map was red down arrow for many, many years. And over the last year, this has been going the right direction. So that's really, really exciting to see. And seeing huge growth, in the affordable areas. So the East Zone, which is normally, maybe a less desirable area, because prices are going higher, affordability is becoming more of a problem. People are seeking affordability, and anyone who knows Calgary knows that the kind of the east side of the downtown is where you'll see more affordable options. So that's starting to drive the price up there as well. So I will stop sharing my screen. The only other thing I wanted to talk about briefly is, even today I had several conversations. People text me like, well, I want to buy, I want to invest, I want to grow my portfolio, but I can't find cash flow, or, but nothing is like as it was 2 years ago, like the types of deals, we were looking at then. And if you want higher cash flow strategies, then you have to, change what you're doing. What may have worked 2-3 years ago may not work in the same way right now. Now, that's not the same answer for everyone. So I do like to kind of point this out, because higher cash flow strategies, not always, but often can mean like short-term rentals or student rentals, where the level of work also goes up, and potentially the level of risk or turnover or work for most people. So you may want to adapt your strategy if you really need higher cash flow during times of higher rates and making those numbers a lot more challenging. But if you don't need the cash flow as much, also then reminding yourself why you are buying this piece of property. You're not buying it simply for X amount of cash flow per month. You are buying it to build a portfolio, to have a tenant pay down your debt, which is, I know what Ryan's going to talk about. This is going to tie in really well. But I think at these times of uncertainty, it's really easy to forget the main large reason why we invest in real estate. And it's not for that, few $100 a month that's awesome when we do want to see some positive cash flow and to take care of the property on its own. But usually, when you are looking at your lifetime and how long you're going to own this property for, that's not the largest ROI that you're going to see, very, very likely. So bearing that in mind in times of uncertainty is really, really important for all of us. So just keep that in mind. But I think with that, we will bring in Ryan. Ryan is joining us here tonight. Ryan's been here many times, speaking at the Phipps Real Estate Group investor socials, live and in person. And Ryan is an investor-focused mortgage broker. I've been working with Ryan since 2015 now. And we've done a lot of deals together in a lot of different market conditions. So thanks for being here tonight, Ryan.
Yeah, thank you for having me again, Natasha. I appreciate the opportunity to come out and speak to everybody. I see a lot of familiar faces in the crowd, so that's nice to see. It's growing.
Awesome. Thank you. Yeah, thanks for being here. So yeah, tell us about kind of your thoughts and take on things. We chatted earlier today and this discussion of like, should I buy? Should I wait? What should I do? So love to hear your take on this and maybe break it down a little bit for us.
Sure. Yeah. Obviously, as everybody probably knows, the market's a little hectic right now. Lenders are behind, and it just flows down the line, right? Whether it's an appraiser or an inspector, everybody's sort of falling behind. But I've got clients going, I need to not go in with a financing condition or skip this or skipping something. And obviously, I don't recommend that, but that's what I'm seeing a lot of right now. And it's just, it's a lot of work for you realtors out there right now as well. So I was just doing a renewal today for a client that's coming up in December, and looked at her rate and 1.7% that she's got to get rid of here coming soon. So that's a little disheartening, but that's the reality of where we're at with rates and what's going on in the market, that those 1.7s and 2s are gone. And when I see, people sort of sitting on the sidelines waiting, I'm not quite sure what they're waiting for, right? If people feel that rates are going to drop down in that area, it's not going to happen. Most economists are talking about a 4%, is where they'd like to be over the next few years, right? So when I ran these numbers today, I surprised myself, because what I looked at is I took a $550,000 home. And I did one scenario of putting 20% down. So as an investor, or as just somebody purchasing their first home and they've got the 20%. And I'm sorry, I don't have these numbers up on a slide or anything, but I'm happy to go through them with anybody that wants to hear more about them. But putting 20% down. So the question is right now, what are people waiting for? Rates or prices? And I don't see either of those two really going down that far. And I'll go into more detail about that, but $550,000 mortgage, 20% down, a current rate, conventional rate. Some rental rates are different than conventional rates, but I used a 5.14% 4-year fixed. And that gives me a mortgage of $440,000. I'm not going to go through all of these numbers, but over a 3-year time frame, you will pay down that mortgage $28,000 in 3 years. In 4 years, you're going to pay it down over $38,000 in 4 years. So that is the cost right there of waiting to jump in.
Right.
So then hypothetically I go, okay, yeah, let's say you waited 6 months and they came down to 4%, and then you jumped into the market. How much of a difference in rate or pay down is that going to affect my scenario? So I did that as well. And same conditions. We just have a 4% interest rate now. your pay down over a 3-year time frame is 32,000 versus the 28,000 at 5.14. So a difference of 4,500 bucks. Not a deal breaker in my opinion.
Yeah.
Over 4 years, you will pay that mortgage down 44,651. So a difference of $5,900. So to me, that's right there, the shortfall of waiting to get into the market. And I can tell you right now that probably 90% of what is keeping me busy right now are investors. They are coming into the market going, I see something happening here. Something's going on in the area. I'm jumping in. And we'll figure out that rate. And they're running their numbers like this, going, yeah, it's $5,000 if I wait and get a 4%, but that might not happen.
Right.
The other part of it is that property going to appreciate, right? And I'm never one to say, yes, it's going to go 3%, or yes, it's going to go 1 or 2 or whatever it is. But things that I do know fundamentally are migrations at an all-time high right now into Alberta. We all have talked about that. 20,000 last year. And even though 20,000 doesn't sound like a lot, that's like the size of Canmore, right?
Mhm.
You know, a new city just, you know, coming into Alberta. So that's those are a lot of homes that we need. And you just showed the numbers of inventory. What was that number again? Is 1,300 or something like that? You know, 20,000 people coming here. There's not enough, right? So when we see that, as well as GDP numbers being, you know, the highest and expected to be the highest in the country, I have to think that prices are going to go up. Supply, demand, plus those two fundamentals. So let's say a 2% appreciation on your property over the next 3 years. Well, at that 550 range, you're going to have an increase of about $33,000. Over 4 years, 45,000.
Right.
So what is the total cost of waiting? Well, at 5.14%, you're losing about $20,000 a year. So it's $61,000. And at 4 years, it's 84,000. Same thing, about $20,000 a year, the cost of waiting. So that was surprising. Wow. You know, it's significant, right?
It is.
Now,
yeah.
Somebody might come to me and say, well, I don't have the 20%. But that's fine. I ran the number for 5% down as well. 5%, as we all know, it's insured. So you're going to have a bigger mortgage amount, right? You put your 5% down and then they throw that 4% CMHC fee right back into your mortgage. And you're basically at your purchase price. So I ran the same number. After 3 years, you'd have $38,000 paid down on your mortgage at 5% down. Over 4 years, at 52,000. And again, same 2% increase, right? So it's quite advantageous even at 5% to get in the market. And I was having this conversation with a client just recently, and I feel like a lot of first-time home buyers are sitting on the fence waiting to get in. And she said to me, you know, I think we have an opportunity to renew our lease. He won't raise my rent, and we have 1 more year. And at first I'm like, okay, that sounds fine. We can go ahead with that, whatever you need. But after running these numbers, I need to give her a call after and go, did you actually realize that it could, you know, cost you $80,000-$90,000? And it's a big jump. And the other thing I think about is, if prices go up, how many people are going to be pushed down into that lower category because they just can't afford to buy what they want, right?
Exactly.
So getting in the market is a big deal.
Wow, that's fantastic. And never mind from the homeowner perspective, or these first-time home buyers, never mind they're putting their rent, you know, obviously we're all landlords here, but from their perspective, or from our kids' perspective, if you have kids or, you know, family members who are looking to buy, like, I don't see the benefit in waiting. I really like how you started that too, where like, is it rates versus prices? Like, why are you waiting? It's one or the other. Yeah.
You know, and for investors out there, just a side note, those that were in variable rates and are waiting to see what happens, I just ran some numbers for a client of mine. We are going to switch her rental out because she's at basically prime right now, and we're going to switch her out and do a 3-year fixed. And it was right around that 5.14% range. Give or take, and we're going to extend the amortization out. She has a 3-month penalty, which is about $1,500 in this scenario, but
Right.
it's saving her close to $400 a month.
Wow. And
on
this
her
is for an
mortgage payment.
investor,
Yes.
for a rental property?
Yeah. And originally we didn't set this this property up with a readvanceable HELOC.
Mhm.
At the time, it just wasn't in their interest, but now they want to buy more. And so we're going to go in and set this up now because she's made quite a bit on her property over the last few years. It was actually someone you sold, Natasha, but
Yeah.
so yeah, she's pretty excited. She's going to save about $400 a month and access about $80,000 of equity. So
Woohoo, I love that.
so
That's
there
great.
are options out there for people. The
Yeah.
variable, yes, sometimes, you've got to go into it just to get the file on the go, but you have options there with the variable rate.
Mhm. Okay, well, that's awesome. Thanks for breaking the numbers down for us. I mean, at the end of the day, like as investors, that's what we should be looking at, not looking at it with our emotions. And I think even, like you said, even a 1% appreciation rate, like let's be super conservative. Even if it doesn't appreciate, right? It still makes sense when you look at it that way. So that's very, very helpful. Was there any, did anyone have any questions for Ryan about that?
Ryan, I have a question actually.
Oh, it's Dana.
Because personally, as a realtor dealing with my clients who are all saying like, how come interest rates are going up, but it's still so busy? I personally feel like there was a lull in the market there for like probably 3 or 4 months when interest rates were starting to go up. And still all of a sudden, like there was this frenzy that happened starting in like December, January that is still continuing. Are you personally with your clients experiencing people just like realizing that this is the normal rate now, or like they've accepted it and that they're just like kind of moving on from what the low rates were to what they are now? With most of your clients, are you experiencing that?
Yeah, I would say so, Dana. It's you're right. There was a lull back in the fall. It's pretty quiet, and people are starting to realize that this is the new norm. Where are rates going to be in 3 years? Who knows? But I can't imagine they'll be back down to that 2% mark. I mean, chief economists, CIBC, and different big banks, they're thinking 4% by the end of the year is where they're like to be. And right now we do have a 5-year insured rate of 4.34, so we're not far from that. But the bond market has been going up again, so we expect rates are rising over the next week or so by about 5 basis points. But yeah, I think you're right, Dana. People are just seeing that this is the new reality, and you've got to deal with it. You need a place to stay and place to live, and you are going to get tired of spending $2,500-$2,700 a month on rent. That's what happens. And I've been in Calgary for 25 30 years. I don't even know anymore, but I've seen some different cycles happen in this market. And what traditionally happens, and don't quote me, I know this is being recorded, but the first thing, it's GDP, it's the jobs that are created here, and it's the lifestyle and the affordability, and those are all key factors with what's happening right now. And when people start migrating here, what they traditionally do is they'll rent a place, find out which part of the city they want to live in, find out where their kids are going to go to school, how close they are to their work, and within about 1 year to 2 years, they buy. And that is, has happened time and time and time again. And so when they start buying, if they, over the next year or two, I feel like there's going to be a frenzy. And it kind of reminds me back to 2007. I remember the time we went, my wife and I went to a home builder. There was nothing available, just nothing. And they said, oh, but we do have this one spec home. It's almost done. You can go view it. Well, the people behind us heard us and they followed us to go look at this place. And it was like a race. And we had to go back and we were like, hey, we'll put a deposit. And it was just in drywall at the time, but you just had to picture it. And I feel with what's happening in the market that something similar is around the corner. I don't know exactly what yet, but I feel that energy towards, the housing market like it was back then.
100%. Yeah, I mean, I feel the same way. I don't see the benefit in waiting. I don't think prices are going to come down. Like like you said, I think there'll be these little lull times where you can be strategic and smart, but that doesn't mean that prices are, really going to change a whole lot. On the property management side, even for my own personal properties I manage, like still, I don't know, at least half of the inquiries are out of town people who are moving here, looking for a place sight unseen. They, are excited to come. They're really excited, but they're really struggling with where to live. They've been living, or been staying in Airbnbs and hotels, and they're just really want a place to rent. And those people will absolutely become homeowners. And we saw, right now the inventory crunch as it is. And I cannot see that changing drastically over the next year or two here. So I would expect that to continue as well.
Mm-hmm. Absolutely.
I had a question and then I totally spaced.
There is a question in the queue there.
Oh, is there?
Yeah.
I
Oh,
don't
never
see
mind. It's a direct message.
Oh, that's
I
why.
won't read it out loud.
Yeah, no, don't read it out loud then. Was there any questions, thoughts, comments from anyone else? No.
Oh, you know what? This message is from Anita, and she said I could go ahead.
Okay.
You're fine with me reading this out, Anita? I believe.
Yeah, yes, please do. Sorry, I just sent it to
Okay.
you. So I knew that
Yeah.
it was directed at you.
Yeah. So she says, I have a family member who is 19 and going back to university this fall, wants to buy an investment property and rent it out to pay for itself. Will she get a mortgage if she doesn't have a year-round job, but will have rental income? That can be a tricky one. Ideally, we like the rental income to cover the property, but the lenders do want to see some sort of income. We can do different programs out there where maybe a cosigner goes on for the first couple of years until they start making an income. But to flat out buy a rental with no income would be tricky. It would depend on the net worth of the individual.
This sounds
I
like
hope
a
that helps.
joint venture opportunity possibly, or a bit, partnering up.
Yeah, thank you.
Yeah, no problem.
Cool. Yeah, that's exciting times. I can't wait till my kids are adults. I want to go buy them a condo now. Good. That was a good question. Anything else? Anybody else? What kind of financing challenges are you seeing, Ryan? Like, obviously you talked about appraisals briefly, but are you seeing challenges with appraisals? I mean, the problem in this type of market, when the conditions are so rapidly changing and the prices are rapidly changing, that doesn't necessarily mean that the appraisal is going to meet that exact number when your comps are possibly changing week to week. So what are you seeing out there on that side of things?
We've seen quite a few offers come in that really started out, as a carrot, I guess you could say, where you can clearly see it was under market value. So, they do to get everybody in, get 13 offers or whatever Dana had there. So we're seeing some of those, and, we just, what I tell my clients is just be cautious with how much over you go, right? Because you are in a bidding war. But the appraisals still need to happen. They are doing them. And the lender does not want to lend on anything above what that place is actually worth. So if you're bidding on a property, it's 500 and you decide, I want this property, I'm going to go in at 550. The lender might not agree with you on that. And so you would have to come up with the difference in down payment for that property. So just cautious, I guess, with the bidding and the wars going back and forth between the offers. So, but appraisals have been pretty good, actually. They've been coming in at where they should be for the most part. It's just some of the ones that they just went way above and beyond that. We run into some issues with that, and we have had a few. Some clients want another appraisal done, but it's just you've got to cap it at some point. What are you seeing, Natasha, in terms of properties in terms of going above list? Or is there a certain number that is out there that you've seen? Is it 25,000, 30,000?
I would refer to the team more. Dana, I don't know, or I think Andrea's literally at her rental property right now.
I was gonna say, it's a bit of a crapshoot. Like, it's really hard to decipher what a property is gonna sell for. I've been in an offer presentation where one went 80K over asking, and then another that went 50K, and another that went 40K. So it's like, if it's a good property, people will throw money off, or throw money at the listing, is what I'm seeing.
Right. And it depends too, like if you can tell something is blatantly underpriced, then you have to know that that's a strategy that the seller and realtor have decided they want to deploy. Underpricing, is a very good strategy to get, what I think was it Alex there was 50 some offers on something recently? Like, I don't even know how you even begin to write an offer when there's 50 other offers.
40 offers, yeah, she had.
Yeah. So that's like, a crapshoot, but that's clearly underpriced. So, part of our job, obviously, when we look at the property, is to determine, is it underpriced or is it reasonably priced? And if it's reasonably priced, then that should take into consideration. But yeah, if you are writing offers, well above asking price, or and at any time, if it doesn't appraise for the purchase price, you need to be okay to pay the difference. So keeping that in mind when you are writing those offers. Darcy asked, it seems there is a flood of condos coming onto the market downtown. Is this a trend? And do you know what's driving it? So Darcy, the condo market downtown was the hardest hit sector of the market during the recession. By far, like not even close. And in fact, it was really skewing the numbers in the suburbs. It was making things look much worse in the suburbs than they were. But the downtown was hardest hit in terms of property values, high vacancy rates, just people were just leaving downtown. And so now when they are potentially investment properties where owners can see that they can exit, they are taking that opportunity to exit. They've been hanging on for 10 years, I don't know how long, but a while, and are now taking the opportunity to list. There's not, I wouldn't be necessarily worried about the inventory downtown as in it's too much, because they are selling. And last month's stats showed months of supply for the apartment sector at 1.49, and I can pull up the one for like actual downtown for condos as well. But it's really those investors being able to exit now where they maybe haven't been for a while. So it's their kind of opportunity they've been waiting for. And probably for a lot of them, they're, may still not even be quite breaking even. Or if they do have a bit of profits, it'll be minimal depending when they bought. So it is still kind of the slowest lagging sector of the market, let's say. I'm just pulling up just so I can. So just while we're talking about it, the apartment sector for months of supply for downtown Calgary, we have seen a year-over-year positive price change of 9.79%. That is significant for downtown Calgary. That's like really good news. Inventory is sitting at 2.26. So that is very good inventory. Anything, around 3 months is sort of like considered balanced condition. So we're, creeping into that seller's market, even for the condos. It's not, the same as it is in other parts of the city, but for downtown sector, these are really, really good numbers. And even month over month, the benchmark price came up 2%. So spring market is working really well for apartments as well. And oh, there's Andrea back. I don't know if Andrea, you wanted to mention anything. I know you've been working a lot in the kind of downtown sector, but I know you're multitasking there. If you do want to say anything about the downtown condo market, go ahead.
Sorry, we have a dishwasher repair going on one of my rental properties. Yeah, I would say I agree with everything you said. I mean, there's definitely been more inventory coming on, but I've been finding that it's being picked up quite quickly. And properties that are priced appropriately for the market are selling very quickly. So it's not that we're seeing, an influx that's exceeding the demand, I would say.
We've even seen we've had some transactions on the team that are like difficult transactions, condo buildings with special assessments, post-tension cables, pending litigation, like that we thought would be very difficult to sell. And the sellers were able to transact through this time. So, we haven't been able to say that in quite some time. So it's really going in the right direction for the condo market. Ryan, there's a question there from Tamara. Do you want to address that one?
Sure. Let me just pull it up here from Tamara. Hey, Tamara. Ryan, you had mentioned that there is a lot of inquiries on financing. What time frame should be put into offer for financing? This is a great question, and I thank you for bringing that up. This is the thorn in my side these days. As I mentioned at the beginning, everybody's busy, everybody's behind, and the financing conditions seem to get smaller and smaller and smaller with every offer I see, just because it's such a battle for that home. So to put it into perspective, lenders are usually 2 to 3 days behind right now. They'll issue a commitment. It'll most likely need an appraisal. That's another 2 days minimum to get that done. And that's if I have everything ready to go. So what I'll tell my clients is if they find a property that they're interested in, send me the MLS. If they're serious about writing an offer, I want all updated documents up front so that I have a package that is ready to just hit submit so that we are off to the races on this, because I know it's a piece of that offer that can make or break the deal is the financing condition. I just had one over the weekend that they went in, no financing condition. Now, this particular example, they're putting $300,000 down on a $400,000 home, so I felt comfortable with that. I look at it always, what's my plan B if your financing condition's short? If we can't get an extension, I'll look at options. So when you're putting 20% down or more, you have more options for financing. And it's not that I want to go with a private lender or an alt lender, but I always look at that as a last resort option to make sure we get this home. So if the A lender does not follow through for some reason, and I've seen a lot of different reasons come up that you wouldn't even think about, but at least I know that we can get it done on the B side. And I'll look at every file like that is in a rush, that is on a time crunch. I'll do my due diligence to make sure that we have everything up front and we're ready to go. So to answer your question, Tamara, a long-winded answer, I still like 7 to 10 days at least. But if I have everything up front and ready to go, I can probably swing something in 5 days.
Okay.
Yeah.
All right. Thanks, Ryan.
Yeah.
That's so key of having all those documents up front. And just because you gave it to Ryan, 3 months ago does not mean he doesn't need updated documents too. Like that comes up a lot. Well, Ryan has everything. And then like, are you sure? Like, is it current things? And often no. So making sure everything is up to date, like to the month, so that he can get it entered right away. If you like, telling one of our agents, like I must have 7 to 10 days conditions because of whatever reason, your own comfort, or, Ryan says that's what we need, or whatever it is. During this time, and Renee on my team is here, and we've been working on this where we've been looking at the listings that are not selling. Why are they not selling quickly inside of 30 days? So I have Renee researching 30+ day listings going, why are they not selling? Because some of them are stupid things like they're very easy for us to figure out a solution for. It could be a tenant issue. It could be just the property's overpriced. If it's overpriced, fine, let's start working on them on price. Or it could be, the tenants are messy and whatever. We can see around that as investors. So if that's of interest, let us know, because that is another way to go about it, because someone else's problem can be your opportunity. And there's, almost always a solution for any of these problems. If you really need that, then let's go find specifically that. You might just have to be a bit patient. But the good news is we can buy you that time. If it's sitting for a reason, but we can find out why during that time. So I like that too. Plus, if it's overpriced, it's like they overpriced it because maybe they're getting kind of greedy in the market a little bit. But if they're underpricing it, it's going to sell over anyway. So you may end up shaking out at the very similar purchase price, and it's all marketing and how they presented it to the market. So overpriced listings aren't necessarily a bad thing in this type of market, because then you can get in there, and after 30 days, they're sitting there going, damn, like, okay, I'm not going to get my number, right? So then you come up with your offer, and they might be very excited to see it, even if it's not exactly what they had hoped for at the beginning. So if that's of interest to anyone, let us know. We're kind of working on that in the background as well, and determining what these issues are. And they're not all crazy. Some of them people just need the right idea with it. So, okay. Any other thoughts, questions, things going on? That's kind of it for, I think, what we formally wanted to address.
Yeah. And then Natasha, what's your opinion then? Buy now or wait?
Definitely buy now.
Oh no, I froze.
You did freeze there. You're back. You're good.
My big question is buy now or wait, the title of the seminar.
If you're buying to own long term, I don't see the advantage in waiting. I mean, I just don't see the advantage. You know, whether it's my family or my kids or whatever, I would still be getting them into the market. I don't see the advantage. If you're trying to time the market and go in and out and be, you know, really strategic, I guess, or guessing that way, that I mean, to me, that's always extremely risky. You can never time that stuff. No one has a crystal ball for interest rates, but I think we can all agree, probably most people here, if you're looking at the economics here in Alberta, that, you know, housing isn't going anywhere. We know the Canadian housing crisis isn't going anywhere. And that is just going to mean more and more and more demand for rental product. So if you can be a homeowner or, you know, investor, and you're in it for the long term, definitely getting into the market. Oh, Ryan, I do have one more question I thought of. Do you have anyone that's been going through any sort of like BRRRRs, refinances after, you know, big projects, and has there been any you know, comments on that in terms of the appraisals or any issues, or is it, you know, going in the right direction? Obviously the market's going in the right direction, so that helps, but would you have anything to mention on that, because that comes up a lot?
It really depends on how above and beyond they went on their renos and their pricing, but we have seen some issues come back where you know, they were expecting it to be appraised much higher than it did. So I think just, you know, running your numbers and knowing your numbers is key, right? So you know, if you can do it on a budget, I would suggest that, especially right now. But most people that are in that space have done this before, and they understand what they need to do for that property. But it's also about engaging with myself, with the realtor, and planning it out, right? And going, is this property going to value at what we think it's going to value at? So I think just proper planning gets you over that hump for there.
Well, and the other thing I've been talking about people too is like, okay, let's say it appraises at that really high value that you want, like, but also now your mortgage is going to be that much higher too, which you don't like the interest rates as they are. And now you're going to have a higher loan amount. Like, you know, is that going to give you that long-term, the BRRRR result that you want as well? So I feel like people get really excited about the first half, but then don't necessarily spend much time on the numbers on the second half after the refi, what the numbers are going to look like long-term.
That's exactly it. And one of the big components to this is a BRRRR strategy usually comes with a private lender, and the private lending fees can again make or break your file, and you have to take those into consideration. So knowing those fees up front while you're doing your numbers is very, very important to making this a success. Yeah,
for sure. Awesome. Can Ken asks about the election. I try to stay out of politics here. If you want to make a comment, absolutely do so. Willing to support that. But I tend to keep myself out of the political debates, so that I'm not chasing my tail too much. But for sure, there is a lot to talk about in that space. Ken, and something I think we're all watching very closely to see what's going to happen here, federally and locally here in Alberta as well. Thank you, Drea. Good point. Tomorrow in the Facebook group, and I think we have a Zoom link as well. Correct me if I'm wrong, Drea or Andrea. We do have, oh, no Zoom. Okay, thank you. I don't even know. Supposed to be when, but I'm doing a Facebook Live tomorrow at noon, apparently. And I'm going to be talking about foreclosures and court-ordered sales. So as many of you know, we launched WellShare a year ago. We are a real estate investment trust, and we're buying multifamily real estate here in Calgary, and not just Calgary, we will expand. That's where we are right now. And I went through 2 court-ordered sales for the 2 acquisitions and learned a ton. Learned a ton. Things that I've done hundreds and hundreds and hundreds of real estate transactions before and never seen. Like multiple things. It's really astounding. And if you do want to go down that road of court-ordered sales and foreclosures, because maybe inventory is harder to come by, I wanted to have this little kind of lunch and learn type session. It will be recorded. It will be in the Facebook group at noon. And I'm going to it's not going to be a formal thing. It's going to be really just like lessons learned, some stories, some things I'd never heard of before that I learned, and some kind of like expectation in terms of process and what to expect if you are going to go down this road. So that should be really valuable for those of you that are interested. And then we are having an in-person event June 8th, and this is limited space. We are going to be sending out an invitation for that soon, but it's a live and in-person event, and we're going to have a bit of fun. It's going to be at the Snap Photo Club, which is, we've done events there in the past. They do a lot of photos for us, but it's like it's a venue that has all these different backdrops and things. You can get some updated selfies. We're also going to have our photographer there taking headshots. They can be fun, they can be serious ones. There's all kinds of backgrounds there. So we'll be covering the cost of the photographer and the venue, and it'll be a whole lot of fun. And then we will pop down, I think, to the venue below us for anyone who wants to kind of grab a drink and have a little bit of networking after. So I think we have about 50, 60 room on that event. So if you're interested when that comes out, please register. And if you're not going to come, please let us know. If you do register, so that someone else can take your spot. But that one's upcoming. And then end of June, the other event I'm working on, which is hopefully going to be coming out soon too, is actually on rent to own, and have a rent to own specialist here to come talk to us. So lots upcoming. Hopefully that was informative for everyone. Thank you for being here, Ryan. Maybe did you put your email in the chat there if you haven't, in case
Sure.
anyone would like to reach out to you. If you would like to reach out to us, you can go to our website and sign up to our contact page, and it'll also send you a little survey of what you need. If you need help with property management or sales, or what you need help with, let us know. And if there's no other questions, we will leave everyone here.